Hello and welcome to the Denver Homes Market Report, Denver's premier monthly real estate podcast. This is Ricky.schoonover of Mode Denver Real Estate. Well, unless you live under a rock somewhere, you must be hearing all the noise about higher interest rates. We just held a meeting with one of our lender partners here at Mode Denver Real Estate. What's really crazy is the uncharted waters we are in here in Denver, which we are now discovering. This is something many of the coastal areas like California, New York, and Boston, they've seen this for years. This is where the majority of home loans being made are being done so through the jumbo loan programs. These are completely different animals than the loans that are backed by the large government entities, Fannie Mae and Freddie Mac. For those of you who don't know, Fannie and Freddie are federally backed companies that help provide liquidity to our housing markets. They will often provide an insurance of sorts. And what I mean by that is they buy debt or they back the debt so that lenders can sell their loans on a secondary market, which then allows them to write more loans. If we did not have these systems in place, our banking system would not be able to make the current volume of loans because their money would all be lent out to borrowers. Many home loans are spread out over the course of 15 to 30 years. Banks would need to wait till the money was paid back in order to make more loans. So Freddie and Fannie are there to buy these debts from the bank, so that frees up the banks to write more loans. However, if the banks are going to sell to Freddie and Fannie, they need to fit very specific guidelines. You'll often hear the term conforming loan limits. What that means is there are specific amounts the loan needs to be under in order to qualify to be sold to Freddie and Fannie. Now, those limits are changed from time to time. The limits are even different from county to county, even within the same state. Some high-cost areas like Boulder, the conforming loan limits are over $900,000, which means the home's sales price can exceed $1 million and still fit within the conforming loan limits, while other areas can be somewhere around $650,000, which then limits your home purchase to just over $800,000. Even with these higher loan limits for certain areas, here's the phenomenon that lenders are running into for the very first time here in Colorado, and specifically the Denver metro area, where the majority of loans being made are non-conforming. They are not being backed or purchased by the government-backed companies Freddie and Fannie. Jumbo loans, as they are called, they are still often sold, but they rely on a network of private firms who will buy jumbo loans and service those loans. You can quickly realize how large these firms must be and how much money they must have. They are private firms willing and able to buy up very large sums of debt, then make money over the course of that loan as payments are made and the interest on those loans are paid. When most loans are being made are for homes which cost more than $800,000, this is significant. This is something Denver has never seen before. So what does it mean for you as a buyer, especially if the home you are thinking about buying will end up with a loan amount that exceeds the limits for Freddie and Fannie Mae? First and foremost, you are no longer shopping for a lender just to get the best rate. I mean, yes, getting the best rate you can is important. However, every lender has different alliances with different investors who are willing and able to buy these loans, which are considered jumbo loans. I'm always a proponent of my buyers seeking out a local lender, regardless if they're buying a $200,000 starter condo or a multi-million-dollar home. One of your best moves is to seek out a trusted local lender who knows the local market and the current conditions. By doing so, these lenders will typically have investors who also know the local landscape, and this will greatly increase your chances for getting your loan approved and getting to the closing table. Now, the rates can vary, even more so than what you'll find with conforming loans. It's just as important today as ever to really shop around, and not just for the rate. We have been conditioned to think of our loan in terms of the interest rate, and although the rate you eventually lock in is significant, it's equally important to realize a few things up front. This goes for conforming and non-conforming loans alike. The rates change daily, sometimes multiple times in the same day. So calling all the banks today and picking out your lender solely based on the rate they tell you is just foolish. The other important is that everyone is different. Banks will set your rate partly based on their perceived risk of making you the loan. So based off things like your credit scores, your debt, your income, the amount of money you're putting down, all these things will affect your rate. Even the type of home you are buying makes a difference. Calling a lender today and asking, what is your 30-year mortgage rate? Is pretty much the same as you calling me today and asking me over the phone or via the computer, how much can I sell my home for? The fact of the matter is, the value of your home, just like your interest rate, it's just not that simple. I mean, ask those iBuyers who lost millions of dollars by trying to buy homes with little to no due diligence. Did they really think the type of buyers who were going to skip the largest pool of qualified buyers and simply sell to an iBuyer were going to be selling them homes that were in the best or even average condition? Of course not. For the most part, these iBuyers got stuck with homes that needed far more work than the average buyer was willing to take on. Things like cracked foundations, expanding soils, and other issues like mold. Or the homes were just neglected to a point where it would cost more to fix them up than you can sell them for, even after the repairs. Why not try to maximize your investment? I mean, how are you reasonably sure you are getting full market value? It's not rocket science. You present your home in its best light and to the largest pool of qualified buyers possible. Is your chance at full market value likely if you sell to some national website which pays to license access to the housing data and then sells your personal information to the highest bidder? No, of course not. Your chance at finding the buyer willing to pay full market value for your home time and time again has come from your local professional realtor cooperating with your multiple listing system, or MLS. This system is regulated. We realtors pledge to adhere to a code of ethics, keeping your transaction above board and treating you with a fiduciary duty to maintain your best interests above our own. So now the lending game is changing. Now you know not to simply call around or browse the internet asking lenders what their 30-year fixed rate is. The fact is, your situation is different from anyone else, and there is homework to be done in order to give you your rate. When you call around or go to the internet searching for rates, just know those rates will change, and they are not taking into account you or your specific scenario. Now, I've got one more reason here for you not to get caught up on the rates alone. In most cases, you lock your loan rate for 30 days. Now, you can lock your rate for longer than 30 days, but that typically comes at a premium, and you'll pay more in closing costs. If you want to lock your rate for longer, or if your rate lock expires and you're not ready to close on your home on time for any reason, that can be expensive as well. You'll typically want to lock your rate about a week or so into your contract, meaning you have already aligned yourself with your realtor and your lender, you are pre-approved, you have already found your home, you've already offered on that home, and your offer was accepted by the seller, and you are now in your first week or so of doing your home inspections and your due diligence. Now, your typical purchase contract is 30 days. So if you wait till that first week and then you lock for 30 days, you're giving yourself a week of cushion, just in case there are any unexpected delays, of a few days here. Your 30-day rate lock will not expire. Following this as a guide will help you relieve stress, often save you money, and also help you focus on the big picture, that you are buying your home. Your home is an investment in your future and so much more. The place where you'll make memories, and yes, hopefully over time, with any luck, this investment will increase in value. Real estate has had a great track record, and part of the reason real estate continues to do well is there is a certain level of trust in the markets that the transactions are being done in a fair and ethical manner. You are not trying to time the markets or falling prey to the latest crypto craze. It's your home, not the stock market. If you want to gamble, go to the casino. Okay, let's shift gears here. I do want to jump into some numbers today. So how many homes did we sell in this past month of May? And do you think we sold more homes this year or last year in May of 2021? I'm looking at the data now, and here in May of 2022, we just sold 8,875 homes, whereas last year, May of 2021, we sold just shy of 9,500 homes. So we sold about 620 more homes last year compared to this year. Now that's pretty darn close. And in fact, when you look at the number of listings of homes available for sale, we had about 11,000 homes available in this last May 2022, whereas in May of 2021, we had 14,000 homes. So about 3,000 more. Now, if you're a regular listener to my podcast, then you already know this. But if you're a newer listener, go back and listen to my past shows. There for a while, when I was reading off the numbers, there were these huge disparities between the listings available for sale year over year, where the previous year, we sometimes had almost 100% more homes available for sale than this current year. Now, some say the tide is starting to shift, but for those of you who follow my show, you know very well the tide has been shifting for nearly the past 8 months or so. And only now are people starting to realize this, because they are now tuning in and paying attention, and the trends are now well underway. And really, this shift started several months back. The reason for this is, again, that trained focus that we all have sort of fallen into when it comes to interest rates. Yes, the rates are important, but just remember they change all the time and everyone's situation is different. So pay attention, sure, but don't get hung up on them. Well, that's going to wrap up today's podcast. This is Ricky Schoonover, your host of the Denver Homes Market Report. Please visit my website, www.denverhomesmarket.com. If you are thinking of buying or selling your home here in the Denver metro area, give me a call. I would love to chat with you. It's never too early to get me involved. In fact, the earlier you get me involved, the better. I can often save my clients time and money. When selling your home, I can help you with some of those pesky honey-do lists so we can get your home ready for market. If you are buying, I can help guide you to an amazing local lender. So don't hesitate to call me, 720-688-5110. Other than that, I hope you have a wonderful June, and we'll reconnect on the first Thursday of July, which is going to be the 7th. I'm working on some great content, and we'll talk about what's going on in the current housing market.